Hello and welcome, guys, once again to our YouTube channel as we take you through the mysteries behind trading. So for this particular series, we're going to cover with you the focus sessions and focus lessons concerning price action. So this is going to be a series for price action lessons full time. So we're going to cover quite a number of series, more than 5. We're going to have more than 5 episodes, if not 10, for this particular session concerning price action. So when it comes to price action, what you need to know, first things first that you need to know when it comes to price action, you are dealing with price. That's why it's called price action. You are dealing with price, the action of price, the action of price. That is the whole concept of price action, the action of price, how price is acting. So what I mean by price is this number that is here to my right here, that is moving. This is what I'm referring to as price. That is what we call price. So when we speak of price action, we are speaking about the movement of price, whether it's going up or down or sideways, whichever way, whether it's ranging or going up or down. That is the whole basis of price action. So in this introduction, I'm going to show you some of the basics that's consist price action. So some of the basics of price action are this. Price action, as I've said, that you're dealing with the price. You're dealing with the action of price in the market. So if you check my chart here, this is a naked chart, as you can see. So if ever we are to talk about the introduction without even going to the deep complex topics, if you check the action of price on this particular instrument here for the 75 index, if you check the action of price so far, like since 2020, let me just start from 2020. Price was shooting up, came back down, shoot up, came back down, went up a bit, came back strongly down, shoot up, down, up, down, up, down, up. So that pattern on its own, it's just the introduction of price action. So if you check, when you now speak in terms of price action terminologies, price was in a very sharp uptrend, pull back, uptrend, pull back. Then it failed now to complete and continue with the uptrend, because if ever it was going to continue the uptrend, it was supposed to come and make a higher high, of which it failed to come and make a higher low like that. So it failed. So meaning from let's start from 2020. From 2020, price that was actually a pullback, push, pullback, push, pullback. Then here it failed to make a push. So meaning the price stopped, like the uptrend, it ended there, because this price, it failed to continue pushing up and making higher highs. So from there, we're now looking at a downtrend. Push down, retest, push down. Then here now as well, if you check, price failed to make a lower low there. So it's like, it seems like we are still more of having the same bullish momentum that we have been having since 2020. It's still kind of there in the market. Since price here, it actually failed to make a lower low, and it's actually a form of a double bottom, to those which we are going to discuss in the later episodes. The double bottom, first bottom, the second bottom, that's a double bottom. So that double bottom can actually go all the way to the upside to retest this level of this high that we are having here. So it can actually be tested once again. So after the double bottom, you should check, push up, it was pushing up, retest, pushing up, retest. Right now, it's in a form of a push up. So here, if this market fails like what it has done to make a higher high, it can actually come down all the way. If it doesn't come here, it can stop somewhere there. So that is actually the basis of price action. So this market, according to what we are seeing right now, according to what we are seeing. For example, I spoke about the double bottom. Every double bottom, it always has three significant points, which are the top, that left top, the right top, and the middle point. The middle point is this one. So that middle point is also a key level, because the market can actually break the middle point and actually retest and continue going all the way to the right key level there at the top. So the basis of price action, as I mentioned, is you actually seeing price clearly on a clear picture, on a naked chart like this, without having a lot of indicators that can actually distract you from seeing actually the action of price that is happening. So I don't advise you to apply indicators on your chart immediately. Yes, you can use indicators just for further confirmations here and there, but they mustn't be your basis of your trading. They mustn't be the basis of your trading decisions. So price action, we're dealing with price, the movement of price. So here, this is a candlestick chart. A candlestick chart, this is simply a visual representation of price. So we have a candlestick chart, we have a line chart, we have a bar chart. So me, I usually prefer the candlestick chart since it gives clear entry points and clear exit points. But you can also use a line chart and a bar chart as well. So when it comes to price action, as I've mentioned, you're dealing with the action of price. So the first concept that I want to introduce to you in this introduction is the three kinds of market movements, the three types of market movements, The first type of market movement is what we call an uptrending market. An uptrending market is a market that is going to the upside, but in a trending way. For example, it will be forming higher highs, higher low, higher highs, higher low, higher highs, and higher low. So that market, so long the market is moving in a series, in a pattern, forming higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows, that market is in an uptrending format. So the opposite is also true. If a market is moving in series of lower lows and lower highs, lower lows, like lower lows, lower high, lower low, lower high, lower low, lower high, lower low. So if a market is moving in that way, it's actually called a downtrending market. It's a market that is going down, but in a trending way. Then the last form of market movement is what we call a ranging market or a consolidating market. This market is neither going up or down. It will be maintaining a certain range, in the market, not breaking that range. That is what we call a consolidating or ranging market. So as a trader, how do you make money? For example, when you're in an uptrend, as I mentioned, that an uptrend is a market that is going up. So one thing that you have to know in an uptrend market is that the buys, like the buying opportunities are going to be, which are these ones, are going to be impulse entries. They're going to be the impulse entries. Then the selling opportunities are going to be the pullbacks. The pullbacks are going to be the selling opportunities. So you actually need to make a decision, obviously, to be on the side where the market is mostly moving. Like, obviously, you want to be on the side of the impulse moves. So in an uptrending market, you actually need to be keeping in mind that you need to be focusing more on the impulse move side. Be on the side of the impulse moves, because that is where obviously the big institutions are. That is also the side where the big boys in the market are. So you actually need to make sure that when the market is uptrending, your buys, you can hold your buys for long, and you can actually scalp your sells. You can swing your buys and scalp your sells. Swing your buys and scalp your sells. That is in an uptrending market. Likewise, in a downtrending market, you need to make sure that your sells, you can hold your sells for long, and you scalp buying opportunities. That is actually how you trade a downtrending market. So those are the two ways that you trade an uptrending market and a downtrending market. Then when it comes to a ranging market, you need to make sure that you are buying the bottom bottom of the range, you are buying, then you take your profit at the top of the range and actually sell. So you are buying and selling, buying the bottom and selling the top. Buying the bottom and selling the top, like that. So that is the 3 types of market movements that are there in the market. There is no other market type that is there in the market besides these 3. So you knowing this in mind, since this is an introduction to price action, you actually realize that once you have this understanding that we have 3 market type movements in the market, the first thing that you always need to identify when you now want to come and trade and place your trades in the market, obviously, is to identify what is the current market type that this market is currently in the long term, because it is the long-term market movement that determines even the shorter-term movements that are going to happen in the market. So you actually need to come to the bigger time frames, the daily time frame, the monthly time frame, the weekly time frame, and identify the major market type that is currently there in the market. Once you've understood and seen the current market type that is there, then now you now know which opportunities you're going to be holding, which opportunities you're going to be scalping, which opportunities you are actually possibly going to be holding for a longer period of time. So knowing that, it actually helps you even to not take some opportunities that are not on the side of the trend that you would have seen. So guys, in this introduction, this is just the introduction. We are still yet to go deeper and deeper into the concepts of price action, where we are going to tell you so many things that institutions and big boys, they don't even want you to know concerning price action. So we are going to go deeper and deeper and deeper in the next upcoming episodes concerning price action. So this is just the introduction. This is just the introduction of price action. This is just the introduction of price action. I hope we are going to meet again in the next episode as we go deeper and deeper into the concept of price action and how you can actually make the most out of your trading career utilizing price action without any form of disturbing indicators, without any form of indicators that can actually distract and mess up your chart. So price action, guys, it's actually a smarter way of trading. If you check my chart is very clear. There's nothing, there's no indicator, there's nothing there, but I can actually tell you what is actually happening right now. I can actually show you the opportunities that are currently right now. For example, right now, there are higher chances for this market to continue going up. The higher chances of this market to actually continue going up. Once that daily candle closes bullish, the higher chances of the price pushing all the way to that a most recent high there. So just with this concept of price action, you can actually make your trading to be actually a very interesting journey. You can actually make your trading an interesting journey without messy charts, with very clean charts, using this smart way of trading that I'm just telling you. So guys, I hope you learned something in this first introduction phase. We hope to meet you in the next upcoming episodes. We hope you have liked, we hope you have already subscribed, we hope you share with us your genuine content, your genuine comments in the description below. So we hope you are going to meet on the next coming episodes. Till we meet again, guys, on the next coming videos. Thank you.